Attendees are in listen-only mode.
Good evening, everyone, and welcome to Admiral Markets What's NFP and How to Trade It webinar today. My name is Nenad, and I'm known as Tarantula on all other websites and forums. So if you follow Admiral Markets blog and Admiral Markets webpage along with Forex Factory, you know that I'm making a break until the first week of the January, where I will resume doing everyday analysis, of course, with maybe some new pairs along euro dollar, maybe cable Aussie, I will see. And just before we start the webinar, I will thank you all who attended our last sessions of webinars, because from New Year on we will be having new set of webinars where I will present you price action trading, some very new stuff that I didn't do last year. I haven't done it before, so that will be a complete new set of webinar with all new strategies and all new stuff. Also, I want to tell you that considering price action these days, I hope that you didn't trade a lot, at least, because we had a Christmas, as you know, and after Christmas there is a big volatility. I warned about it. I also warned that euro, for me, looks bullish. If you follow Forex Factory, Admiral Markets blog, and webinars, you know that I was slightly bullish on euro dollar, and you can see that it almost touched 39. We also have a big strength in dollar pairs, especially versus yen, and maybe dollar yen was a winner among all currency pairs, because it's a really very volatile but also very good trending pair. So I think that we could resume also trading dollar yen after New Year. So expect my dollar yen analysis after the New Year, of course. So we can start today about NFP and how to trade it. I will show you strategies. Of course, strategies which I will present you, you need to demo trade it. You need to always demo trade it prior to going live. So today we are going to talk about what is NFP, pros and cons for NFP trading, and of course NFP trading strategies. So NFP represents the total number of paid U.S. workers of any business, excluding the following employees: general government employees, private household employees, and employees of non-profit organizations that provide assistance to individuals. It also includes farm employees. So non-farm employees is one of the most volatile and one of the most strategically important events for US dollar. But since this is webinar about NFP trading, we won't go into very specifics of NFP day trading and how it can be done on daily time frames and so on. We will delve especially into the NFP trading method. So this is the definition in its purest form about NFP. Also, we need to know that the employment report is released on the very first Friday of every month by the Bureau of Labor Statistics. So it is released on the first Friday of every month. On special occasions, there can be slight delays, but usually there are none of those delays, and this is the correct date every first Friday of every month. Prior to NFP, we have ADP report, but today it doesn't have a specific strength like it had, let's say, 3, 4, 5 years ago. Okay, so we don't deal with ADP today. We only deal with NFP and NFP specific trading strategies. Usually, data covered is for the previous month. So the report contains information on unemployment, job growth, and payroll data. Okay? So you need to know the data covered is exclusively for the previous month. The report that which it contains is not very, again I say, it's not very important for spike trading. It will be important for intraday positioning after the NFP and possibly 2 weeks after the NFP has been released. It can give us the trend, next trend in following 2 weeks. But the thing considering spike trading is a bit of different. We are not basically interested in those numbers because NFP can be a bit unpredictable, okay? So basically what I'm implying, we are not interested in any of those numbers. We are interested in spikes. You know, after the NFP, there is a spike, and that first initial spike is what we are gonna trade when we trade NFP. So we are not interested in any of those numbers. Will it be good? We can mention it, of course, but for spike trading, that is a bit irrelevant. Because I know that it can confuse you, and very often it also confuses me because numbers are one thing and actual trading is different thing. Everyone usually expect that usually good numbers for US dollar means that risk on, where euro dollar and US Japanese yen go up. So that is a bit of paradox situation, because if there are good numbers for US dollar following NFP, that should be dollar strength, not dollar weakness. But what we usually have is risk on currency, where euro dollar and dollar Japanese yen go up, especially euro dollar, because euro is a risk currency. So if there is a risk on, euro dollar usually goes up. Okay, that is, as I say, a bit paradoxical situation, because by any means US dollar shouldn't go up if there are bad results and vice versa for good results. But there is a slight disparity between what traders do and what actual numbers do. So I have come to a conclusion that and I always said it also 2, 3, 5 years ago, that when good numbers come out for NFP, investors put the money into stocks, creating a lack of cash flow for dollar. And that is when dollars falls down. So there is no dollar, how can I say, big liquidity of dollar in markets. Usually those dollars, big money, is put into stock markets, and that creates a lack of cash. Cash is currency, okay? Cash is currency. So if there is a lack of cash flow for a particular pair, that pair is going down, okay? That is my conclusion, what I also mentioned a couple of years ago on Forex Factory Spiders then. And actually that can be explained if you know that some 5, 6 years ago we had a slightly different situation. Not slightly, but completely different situation. We had a situation basically where those currency pair perfectly followed those news. So if the news is good for dollar, that means that euro dollar will go down. But that disparity was created after some 3, 4 years ago, and that is also a situation for today. So this is important for you to know. And also the important thing is vice versa happens for bad NFP numbers, okay? Vice versa happens for bad NFP numbers. This is risk disclosure statement. By proceeding further with me, you're accepting all risks associated with Forex market and that is also containing these strategies which I will present you. Now we go first with pros and cons of NFP trading. The advantages of NFP trading is that it's very volatile. It's a very volatile. We can exploit fake outs, can be very profitable, and it may give us a prevailing trend. But I will say mostly that we don't do fake outs. We can exploit those fake outs, but only on the first spike, and I will show you how to do that. There is a good thing with NFP, because it can really boost your account if you do trading a lot. And I don't think NFP is not. It is the most volatile news which can affect us day traders. After, of course, FOMC, bid rate announcements, ECB conferences, Fed conferences, Bank of Japan bid rates conferences, those kind of things. But those are not standard news. Standard news are usually those numbers which NFP produces every month for the prior month, and we want to exploit. If we trade it, we want to trade it how we should trade it. We want to exploit that very first spike. Now, if you want to day trade, that is a completely different situation, because usually it gives us a prevailing trend for next 2 weeks. Usually next 2 weeks are usually prevailing trend. But what I want to see is, I want to see spike. I want to see after NFP, I want to see this, or I want to see this. Whichever comes first, we will trade it. Okay. Next thing, those are disadvantages of again, this is advantage, it's volatile, but also it is disadvantage, and it can happen if we are at the wrong side of the market after NFP has been released. We can really be spiked out. That spike can really, if we don't do the proper timing when we trade NFP, that can be really disastrous to our account. And that is why I always say, when trading NFP, be very concentrated, be very nimble on your fingers. Also, there are initial whipsaws. And what is a whipsaw? Basically, whipsaw is when price is moving into one specific direction, and if it goes this is called whipsaw. We don't know where price is going, and usually when price is going a lot in one direction, then it spikes out in second direction, then it goes again into regional direction. That is called a whipsaw. And if we see this, it's better to close out the trade in slight loss than to risk completely risk the trading for those kind of spikes. Risks associated with NFP trading are huge, really are very high, and I don't recommend doing a big leverage, of course, when doing NFP trading. As I say, there are irrational movements during the NFP, and those movements cannot be technically predicted by analysis. We can know the general direction, and that is why I always warn prior to NFP that day particularly NFP will be held, and that I don't want to write about specific levels in that day, just because I'm not so sure where that spike may lead us. Okay, if the spike is big, that can create a lack of technical analysis assumptions, and we can have irrational movement to the downside. Then a price will correct itself and go in the way of the prevailing trend, and that is NFP. It should be solely traded, and I don't recommend holding any positions prior to NFP. That is very important. Don't hold any positions prior to NFP. The only thing which you can do, of course, after the NFP is of course NFP spike trading, and prior to NFP you can do some scalps, okay? But those scalps are also very, very restricted. Now I will deal with a set of specific strategies which I usually do, and when I trade NFP, those are strategies which I usually do, and this is my favorite strategy. This is again, I'm saying this is price action strategy, and that is, for me, when I traded NFP, this was the way how I traded. Of course, nowadays when I deal with let's say when I deal with maybe a bigger money than I was dealing with some couple of years ago, then well, I do it only from time to time. Of course, I don't trade NFP, every single NFP. I may do one in a couple of months, but that is also very subjective, because I want to see, first of all, prevailing trend, and then I want to trade NFP. But these are general guidelines, and this is the way how I traded all these years, okay? So I will give you my view and my way of trading, so you can, of course, as I always say, you can and you should demo trade it prior to going it live, okay? Always demo trade it. So let's say we will go with euro dollar 1 minute trade, but you can also trade euro dollar, especially dollar yen, and Great British pound dollar. So those are three currency pairs which can be covered by NFP trading, and I will show you how I did some long trade walkthrough on some specific dates. So we should watch, this is important, we should watch the very first spike on 1 minute time frame, okay? This is the important thing. You need to be calm, okay? You need to be well slept. You need to be, you shouldn't be tired. Your reflexes for this kind of trading should be very nimble. You should be very, very concentrating on that particular currency pair which you trade. Okay? You should be concentrated on that, not on other pairs. You're not interested in any time frame beside 1 minute time frame. You don't look at other currency pairs except these currency pairs, and you want to trade the very first spike. Now, after the spike, I will show you later screenshots, so you will also have, you can also see it, what it looks like on screen. Okay, mark the Fibo retracement depending on initial direction. And I state it again, mark the Fibo retracement depending on initial direction of that spike, okay? Now, we should wait for pullback to either 78.6 or 88.6. That is called aggressive NFP trading, and that is a way better than breakout of NFP range, and I will show you later why it's better than to trade that particular breakout. You can trade a breakout, but that means that your stops should be a lot higher than this aggressive approach. Why is this aggressive approach and why this is conservative approach? The aggressive approach is because you want to trade that very first spike retracement, and conservative approach is you wait for either range, whatever the range, to be broken. I will show you also that. But if that NFP spike is big, that means that you need to put stop loss below the spike, and that can be a bit of very bad for your risk to reward. So that is, if you ask me, I usually go with aggressive approach, and that is I'm waiting for pullback to 78.6 or 88.6 fib, and then enter the right direction. After we can mark the Fibo, depending on initial direction, we of course wait for a pullback, and then we enter the trade. Stop loss is always placed 5 pips above last high low, above last high or below the last low. You know that already, how to place stop loss. So this was NFP. This wasn't the last. I also have a screenshot after this one. I have the screenshot for 6th of December, and this was the NFP. I'm not sure if this was September, but it doesn't matter. The thing is the same. This is 1 minute chart, and by a vertical line I have marked the beginning of NFP news release. This is the beginning of news release, okay? 1 minute time frame. We are waiting for the first pullback. So this is the initial spike, okay? 1, 2, 3, 4, 5, 6 minutes have passed, okay? 6 minutes have passed, and then this is the first spike. This is the first spike, and then we wait for initial pullback. This is 78.6, and this is 88.6, okay? So this is 70 and this is 88.6. As you can see, the price pulled back to 88.6, and then it went slightly downwards before a big shot to the upside. So what you should do is wait for this spike, then wait for retracement. If this candle doesn't make a new high, so we can count on retracement. If this candle, let's say, made a new high, then we would have waited for next candle not to make higher high. We want to see the retracement. So you know how you can identify the retracement. If there is uptrend, as in this case upshot, we want to see high, and next candle not to make higher high. We want to see that it retraces to the downside. Let's say if this candle made a new high, then there was a shallow retracement to 23.6, and we don't trade it. So we want to see candle making highs until it makes. And usually we don't count this candle. This is not negotiable, because this was the first reaction. We want to see the first 5 minutes, okay? 5 to 10 minutes. In between 5 to 10 minutes. So we can identify the spike in between 5 to 10 minutes. 1, 2, 3, 4, 5 minutes have passed, and then retracement started, okay? And you can see if you placed your entry here or there, doesn't matter, because stop loss should have been placed here and the trade would be profitable. And now about the conservative entries. I don't do it now. I don't like to do it, just because we can see that this was the high before the retracement, and this was the low before the retracement, okay? So what happens is basically we want to see breakout here or there. But usually the breakout will be in the initial of the first spike. This is the first spike, that direction. Then there is pullback, and after the initial spike, we want to see this red level broken. So after the initial spike, we want to mark the level with horizontal line, and we want to see that line being broken. This is conservative entry. If this happens here, then we place again stop loss here, and we wait for a bigger breakout. But usually I don't like to see that, because the price can really go to the downside, making usually a false break, and that is a loss trade. So this is the best for risk to reward. 78 and 88. This is 88. This is 78. So 78 and 88.6. We wait for those levels to be hit, and then we place orders. You can also do that with pending orders, but be aware that you are trading 1 minute time frame, and that those pullbacks and spikes in that particular time frame may be very, very fast, okay? This is the entry from 6th of December of this year. Sorry, this is the these incantations. So this is, as we can see, this is very, very important. Now I will mark that. Okay, here it is. And this spike was a bit, how can I say, nasty, a bit nastier than the last one. Now, as I said, we want to see the first spike, and we trade direction of the first spike. Okay, this is where NFP has started. This red vertical line. So the spike goes where? It goes to this. There is the lowest low of the spike. Okay, so we marked it with Fibo retracement. Now we want to see, after the initial spike, we want to see a spike to, of course, to the upside and retracement. This was the initial spike, and now retracement. That is where our levels have been hit. So we trade the first spike, but not randomly. The same is for this one. We wait for retracement, first retracement. And this was the first retracement. Not to this level, 38 or 23 or 50. We want either. I don't want to see golden ratio, 6 to 1.8. No, I want to see 78.6 or 88.6. Now, this is 5 pips above this level. Stop loss should be placed. This is 3 pips. And this is 5 pips above. So 5 pips above the first initial spike high. If we go, of course, in short trade, and we wait for the price to touch 78.6, 88.6, and then enter a trade. In this particular example, we would have been in a slight drawdown, but then you see the price would usually, I don't count the pips. I want to see those levels of Fibo being hit. I may exit here, I may exit here, I may exit here, but usually I want to see exit some around those levels. Okay, and now you can also see why I don't like to trade those breakouts. How we call it? Basically, we call it false breakouts, and those are, as I said, those are very conservative entries, because we want to see this high broken. And what happened is, this is the high after the spike, and this is the low after the spike. Now, if we want to see low, we would have traded after this one. We would have traded to the downside, and we wanted to see this level being broken. But then it would mean that we need to place stop loss a bit high, and risk to reward is very bad. Usually, those kind of trading stuff is done by. Usually it's done by happy trigger trades. You know what happy trigger trades are? I explained that in one of webinars, how to trade breakouts. There is breakout pullback continuation, and there are also trigger happy trades. So if we exploited this one here, that would have been trigger happy trade, because we would have entered as soon as this height was broken. And it was broken for 3 pips, and we would have entered after 1-2 pip, and then we would have suffered a huge drawdown. Eventually, the price corrected itself and went a bit high, but we don't want to see that. So that is why I'm more inclined to that aggressive approach. So the first breakout, this is the first spike to the downside, and then we wait for the pullback. This is where the pullback has started, and we want to see these levels. On 1 minute time frame, I repeat that, this strategy cannot be traded on bigger time frames. We want to trade that particular time frame. That is our time frame for trading, and we want to see that happening in 5 to 10 minutes after the initial spike. And of course, we don't want and you can trade it, but if you enter here, your stop should be 5 pips below this level. And you know, there are big numbers out there. So let's say 36.70 and low. So your stop loss could have been and should have been 55 pips, guys. 55 pips for some, I don't know, 20 pips of gain. That is, sometimes you can do that, but not when trading NFP, because your stop can be hit in mere minutes. Okay, if you go with trailing stops on standard intraday trading, that is okay. Sometimes that will happen. You have a stop loss of 50 pips, but you are profitable and you make a trailing stop after 20 pips, and what can happen? Sometimes the price will pull back to your trailing stop, so you can gain, well, 20 pips instead of, I don't know, 50, 60 pips. But that is the way how we trade with trailing stops. This kind of strategy is worked good for me. As you know, I don't trade each NFP, but you can try to do this strategy, because this is very simple strategy. It doesn't require any indicators. You only need to have a 1 minute chart and Fibonacci retracement tool, and that is very, very simple. So in both of those examples, trades would have been profitable. If we go with aggressive approach, 78.6, 88.6, and 78.6, 88.6, first breakout to the downside, then a pullback, okay, to one of those levels. Also, there is another strategy which you can use, but I'm not very fond of it, because that strategy, prior strategy, somehow it's a bit better for me. I don't know. I like it more, maybe. Well, so 1 minute time frame we use to place Bollinger Bands with 50 period. So Bollinger Bands with 50 period are placed on 1 minute time frame. So you can see that those strategies are traded almost exclusively on 1 minute, guys, time frame. 1 minute time frame. That is time frame because it's very fast, and NFP is also very, very fast. Okay, 2 MAs and are placed then on our charts. We have 5 and 13 EMAs. That means exponential moving averages, guys. So those are placed on the screen. Prior to NFP, we open 15-minute chart to see the prevailing trend. So just prior to NFP, 1-2 minutes prior to NFP, we should open 15-minute chart to see, guys, the prevailing trend. If RSI is above 50, we wait for a buy trade. Okay, we wait for a buy trade. Then we wait for a first pullback, then enter on 513 MA cross. I will show you that. Don't worry, I will show you that. And drive the price to upper Bollinger Band. So this is where NFP has started. Okay, this is where NFP has started. And we wait for the price. This is the first reaction, spike to the upside. And this is the pullback. MAs need to be crossed. So this is the signal for that pullback has started. And after the cross, we wait for realignment. So we wait basically for realignment, and this is where we make entry. So first, in this example, MA should cross first, and then we wait for another cross in the direction of 15-minute chart, 2 minutes prior to NFP. It's also good strategy. You can try it, any of those strategies. You can try this strategy, or you can try that above mentioned strategy. This is my favorite way, but I also know that this strategy also works good, and you can try to trade it. So this is basically how I traded NFP, and I will show you again before I make conclusion I will give you again a quick overview for NFP, and I will show you the rules, these slides, so you can print it to know how you can trade it, of course. The conclusion is NFP trading is very risky due to roller coaster price action. Price can go anywhere after the NFP. Those NFP numbers are traded heavily with big money, so we are not very interested to follow after spike. So we want to see that spike, initial direction of the spike. Spikes can also be very profitable as long as trader knows what she is doing. So spikes can be really profitable. Again, I stress out that is very important to know, guys. NFP is not for faint-hearted guys. Those who have a lack of self-confidence and those who lack confidence in trading should not trade NFP. That is very how can I say, subjective. You need to know the strategy, and you need to believe in yourself to trade it. Volatility fades up to 15 minutes prior to NFP. That means that usually on NFP day there is not a volatility up to 15 minutes prior to NFP. That means that complete London session can be very slow, and usually volatility starts to rise up some 15 minutes. You can see the price is a little bit nervous, and then what you can see is a big spike. Now, I need to stress out another thing which I didn't put in this PPT slideshow, but also very important. Sometimes on NFP you can experience slippage. What it means? If you that is, you know what slippage is, but sometimes that initial spike. So that is why we don't trade this one. So that is why we don't trade this spike. We trade the retracement. So we trade this retracement. That is very important. And now I will show you why. Let's say that you have entered immediately after this candle has been done. You look at this 1 minute candle. If you had entered here and you thought that was price was going a bit to the downside, and then after prior to NFP it went to the long side. Now if you had entered long around there and you have put your stop loss around here, usually what can happen is that your stop loss isn't executed at the right spot. It can be executed here, and that is called slippage. And that is why usually brokers will not count that as their mistake. That is confirmed by NDA disclosure agreement you make with brokers. So you need to know, and you need to know about slippage. That is usually the platform can be stuck a bit on NFP. It can be frozen for a couple of seconds, and then that is because there is a huge burst of volatility. Okay, and when that bursting kicks in, the price may slip you, and that is called slippage. You don't experience slippage on each NFP, but on very strong news. It can be also cable news. So those kind of news are dangerous if you do initially that initial trade. Because I know that some traders say it like this: prior to NFP, mark the swing low and swing high, and then trade it. You make pending orders. But what if the price gets spiked up here, opened your order, and then went down below to spike your stop loss? That wouldn't be very wise. So that is why I'm protecting you and myself with this kind of strategy. You wait for the first spike and then retracement, and then you trade the initial spike direction. Short entries on this and this levels. Okay, on both of those levels you can count on shorts. So that is also important to know. Also, as I say, it's not for faint-hearted. You shouldn't trade if you're bad with your heart, with your pressure, and if you're unsure what to do. Of course, don't trade it with big leverage. Volatility fades up to 15 minutes prior to NFP. Price will do some nervous hiccups, and you know that you can only scalp up to 15 minutes prior to NFP. Restricted scalps. No intraday positioning prior to NFP because price will spike your stop loss. And if you don't trade with stop loss, who knows what can happen. NFP Monday is also dangerous. The price tends to move irrational. On NFP Monday, price tends to move very, very irrational. That means that on NFP Monday we can have spike to the upside, and on New York session the price may completely turn to the downside. So NFP Monday, that is the first Monday after the Friday NFP, we usually don't trade. Demo trade the strategies before going live. So always demo trade your strategies before going live. Now I will present you with these. You can take screenshots so you can know the particular strategies, and if you have any questions now you can ask me. So these are the rules. You can screenshot this and you can practice it. So if you have any questions, now is the time to ask me. Okay, this is the first slide. These are the examples. This is 78.6 and this is 88.6. Okay. Again, another example. Wait for initial spike to downside, then for the pullback, and we make entry to the downside because that was the initial spike in that direction. So the spike was to the downside, wait for pullback and make a downside entry, short entry. 88, 78.6, stop loss 5 pips above NFP spike candle. 5 pips is somewhere around there. Include, of course, the spread. This strategy is using Bollinger Bands and it's done also on 1 minute time frame. And this is what we do. First, this is the entry, this is where NFP has started, and then we wait for initial spike, then we wait for this MAs to cross, and we enter after the second cross. So the first cross is called retracement, and the second cross is called entry. Okay, I think that this is clear to you. If something is unclear, you can ask me. If everything is clear, we can conclude the webinar and prepare ourselves for last. Let's see, I will show you last recap of this year, but I won't deal, of course, I won't deal with, let's open it. Let's open it. Last webinar, Admiral Markets, admiralmarkets.com. Okay, education, webinars. So you can see this is where we will have our last session recap for this year, and this will be basically what we did when holiday started and after the holiday, and then Of course, I can make some expectations after the new year, but this will be the main webinar where I will post setup entries as always. Weekly recap of 6th of January. We will have new sets of webinars. Sign up because we will have momentum in FX trading, then we will have scalping the Forex market part 2, then we will have also introduction to chaos theory, basic chaos system. I will present you many of those good setups. So thank you guys. If you don't have any questions, thank you for listening to me. Thank you for your attention. This is the way how I traded NFP, and this is the way how you should try to trade it, demo trade it before going live, okay? I wish you a very happy new year, but of course prior to that I want to see you on session recap where I will of course wish you happy new year. But for now, have a great weekend. Don't trade now. Now it's the end of day, so we don't trade end of the day, end of Friday. Moves have already been exploited, so wait for after the new year. I would say wait after the new year, okay? Because there can be some surprises on 30 and 31st of December. Thank you, Lord. Thank you, guys. Thank you very much. Talk to you very, very soon. Bye-bye and cheers.